Welcome to TradeTheMBI.com. This is John. This report is for the 25th of June. And market behaved relatively benign and within our expectation. We expected to move down towards that ABM yellow, and that if it reached there, we would potentially see a break. If it didn't quite happen for the ES at least, but what we did see from the NASDAQ was an evening out of the situation. We got an improvement here from MBI white, crossover over the red, so that definitely confirms a weaker bias, definitely. But we're right at that ABM key level, so this is a make or break moment, so to speak, for the market. Almost getting into a reset stage, but this particular point with the readings, we're looking at more negative than positive at this particular stage, and it could be enough to try and grab enough shorts in there to create another move. But you can see from a NASDAQ standpoint, it was kind of critical here. It sort of evened out to where the S&P was, a much bigger jump from MBI white standpoint, the DOC spread being stronger. Of course, you're looking at steel here, still on the DOC from a reset standpoint, so fresh buyers available not too far from the end of the month, so they could see just a little bit of weakness go through, and they have a whole new set of funds to apply, and where else you're going to put them. That becomes the question. The problem with NASDAQ in this particular case is you're isolated to just a few stocks where all those funds are going, so they're going to have to start to spread that. And of course, treasuries basically saying that rates are going to be going to nominally nothing, so you're going to put money into a negative yield. Not likely. That's not going to be helpful at all. And so it's that market dynamic that's created by the Fed speak that really has forced equities. I mean, you don't have any other choice. Your other alternative would be crypto or commodities. And so in this case, oil continuing its rise, and the more there are attacks on the Russian infrastructure, and that it's going to put pressure on available oil, and there's a significant draw. So back to inflationary pressures, just no question about it. And the longer that stays elevated, of course, we know the worse it's going to get. Will it show up in the near term? Not so much, but definitely going to have an impact towards the end of summer, particularly if it stays that way. And of course, contrary to reality, euro rising within that. Okay, so they've got to help subsidize. They're having to pay more for oil, and we already saw the significant increase at the pumps here in Italy when I was on my little vacation, driving around. Almost €2 per liter, and that's what 3.8 liters per gallon. So there you go. Significant. So how long they can support that is unlikely. We know that they can do little pushes in that in between, but overall the euro's got to fall within that kind of strain. From a gold standpoint, Horning, just kind of neutral. The reality is, though, that you're going to reach a building point if oil continues to hold where it is and rally. Then gold definitely is going to take an additional push to the upside. Crypto, Bitcoin seeing extended weakness. Now, some of this is related to that Mt. Gox bankruptcy that is finally being settled, and they've moved a large number of Bitcoins that they're going to be handing back to investors that basically have been stuck without their Bitcoin for half a decade, which ironically for them could be a boon from a gain standpoint, but the market is expecting that there'll be a huge flux of sellers when that does happen. So it's kind of pre-pricing a thing that hasn't happened, and if it doesn't happen, then you've got to have a supply shock situation, and that could be a significant catalyst, at least to Bitcoin in this particular case. We'll see how it plays out. Also, a little bit extended weakness into ETH, and some of these are just filling back into these positive extremes that we had from way back over in late May. So it's not without reason or justification. It's just a normal play in between. Now, I had marked for you beautifully the fill up positive extremes that needed to be done, taking us all the way down to that 5506 range. We didn't quite reach it there, and so we had the pump, and that was with the white MBI jump. So it was just a matter of waiting for the magenta to start its break, and it did that middle of the day. And that led to a move not only to zero, but sub-zero, and very close to what was the low here? 10, yeah, 10 and a quarter. Within our range of filling from a positive extreme, you figure from the original breakout move, the low on there, 55.07, and positive extremes took us, let's follow them right down here and go all the way to the N1, which would be the peak move right there. It took us all the way up to 55.80. So it was an expectation of about 65 to 70 points drop, filling that 80% range for a positive extreme fill, and we got it. So there you have it. Clean and simple, nice and effective. They didn't make it easy. I mean, obviously bouncing back and forth. So you saw in the pre-market the rise into the cash open, and then once the open took place, there just wasn't enough buying to hold things in place. And then once the selling started, just carried through. And that's where we are in the post-market here. They fought back and forth, bringing it up in that, but we've seen significant selling going into the later part of it. So that's the long and the short of it for now. I think intraday that volatility is reasonable. Again, we're going to see a situation where if you break that ABM, you're going to be short below it, and above it you can play positive moves in between. So that's the current read of things. As always, though, trade well. Anything relevant, put on the Skype chat. Have a good one.